everyone. Thank you for this opportunity. I'm going to have a presentation about digitalization in financial auditing and talk about the impacts. This presentation and this work has been made by myself, En-Najah, and Professor Hassane Boujettou from University of Abdelmalek Saadi. So let's move to the summary. First of all, I will make the introduction, then I'll present the literature review on financial auditing. After this, I will talk about the audit risk equation and audit risk model, then a literature review on digitalization, finally technological models and their impacts on financial auditing. Let's move to the next slide. Introduction. So on the economic front, we should know that businesses across sectors have pivoted to digital-first strategies, enhancing efficiency, scalability, and customer experience. Furthermore, the increased adoption of digital technologies has led to the proliferation of data-driven decision-making. So as you may know, that digitalization is impacting all fields, all business fields, all firms, and financial auditing firms are not also impacted by this phenomenon. Next slide, literature review on financial auditing. We cannot limit financial auditing to a single universally accepted definition, but we can nevertheless present some definitions given by international organizations, national organizations, or also by authors. As you may see in my work, I made a table of all these definitions, and I came out with mine that I'm going to present now. So financial auditing is a standardized and methodological examination conducted by a professional who must be and appear independent as well as objective, and whose purpose is to evaluate and potentially certify or not the accounts of a company. Let's talk about the tallying or ticking approach and the risk approach in financial auditing. The evolution of auditing began with the ticking approach, cross-referencing ledger entries with receipts. As transactions grew in volume and complexity, the analytical control approach emerged, focusing on year-over-year financial statements, comparisons using various techniques. From 1920s, the focus shifted to assessing internal controls, with a significant emphasis post-World War II. By the 90s, a risk-based approach was adopted to address audit costs and profitability. Let's move to the next slide. Now I'm going to present the audit risk equation. Audit risk equals inherent risk multiplied by control risk multiplied by detection risk. The inherent risk is the risk of a material misstatement occurring in an assertion, assuming that there are no related controls. Control risk is a risk that a material misstatement could occur in an assertion and not be detected or prevented by the entity's internal controls. And finally, a detection risk is a risk that an auditor's procedures fail to detect a material misstatement that exists in an assertion. Let's move to the next slide now. Literature review about digitalization. It's the process of converting analog information into digital formats. So this is digitization, is the first phase that we had. Then we had the digitalization as the use of digital technologies to change or improve businesses, processes, culture, and customer experiences to meet changing business and market requirements. Then we are living now the digital transition or transformation era. That's the shift from traditional methods, practices, and analog systems to digital solutions and platforms. Go to the next slide. This part is very important. The technological models and their impacts on financial auditing. I chose 4 models: artificial intelligence, big data, blockchain, and cloud computing. I'm going to present each and every one of them, and I'll give two examples of the impact of these models over financial auditing. So artificial intelligence, it's the simulation of human intelligence within computers and machinery. It requires the crafting of algorithms and software to execute tasks typically reserved for human recognition, such as perception, voice recognition, decision making, etc. We'll present two examples. AI's automated processes. So AI algorithms automate several auditing tasks like data gathering, data analytics, and report generation, enabling auditors to delve deeper into the risk assessment and fraud detection, which is the most important part in the auditor work. Also, enhanced fraud detection with AI that can be tailored to identify suspicious patterns or transactions indicative of fraud, affording auditors swift and accurate fraud detection, thereby mitigating organizational financial risks. Second model I'm going to present is the big data analytics, which means high volume, high speed, and varied information sets that requires requiring cost-effective and innovative information processing for enhanced making. So this is the definition given by Gartner 2013. Let's talk now about big data's influence on financial auditing spans with two examples. Efficiency boost. Big data tools expedite the handling of large financial data sets more swiftly and effectively than traditional means. Also, superior data visualization with advanced visualization tools in big data analytics help auditors understand the data they're analyzing more intuitively. Now let's move to the blockchain. Blockchain is a decentralized digital ledger chronicling transactions across a computer network. This chain ensures secure and transparent data storage and transfer without intermediaries. Blockchain's potential reshaping of financial auditing presents also two examples. Transparency and immutability. Blockchain promotes a clear and alterable transaction record, enhancing financial record accuracy. So heightened security. Blockchain's cryptographic features prevent unauthorized access and record tampering, which is very important in auditors' work. Finally, the cloud computing provides IT services including servers, storage, databases, software, etc. We have three main types: infrastructure as a service, platform as a service, and SaaS, software as a service, which we all know. So I'm going to present you other examples of the impact of cloud computing over financial auditors' work. With the enhanced accessibility, auditors can access financial data and auditing tools from anywhere, facilitating collaboration. And also cost reduction, which is very important. Leveraging cloud-based tools obviates the need for personal hardware and software maintenance, proving economical for small and medium auditing enterprises. Thank you for listening to my presentation, and I'll be very pleased to hear if any improvement is needed.